guys, listen, they call it the Plunge Protection Team. You conspiracy theorists, you know what I'm talking about, right? Now, we talk all the time, every day, about China, how they meddle in their stock market, and how the government is actually trying to control that sell-off right there. Well, I got to tell you something. What about our market? Now, officially, this is the title. It's known as the Working Group on Financial Markets. It was created, believe it or not, under Ronald Reagan to stem sell-offs in the market. The street, they call it the Plunge Protection Team. And a lot of people are wondering, are they going to go to work? And at the bottom line right now with the election just next year, will the White House actually allow this market to pull back? Joining us now, Jeff Sica is president and CIO of Squared Circle Alternative Investments. Now, Jeff, you are a skeptic. You're a bear. Do you believe in the Plunge Protection Team, and will they go to work?
Oh, there's no question. I mean, there's the Plunge Protection Team has been in formation for a number of years. Now it's at its peak. And what I anticipate is as we get closer to the election, they're going to put their efforts into overdrive and make sure this market does not plummet, because that would be the worst thing for all the supporters in the White House.
How did they do that, Jeff? Listen, I look at the data. Individual investors, believe it or not, a lot of people would be shocked to know this. They're not buying U.S. stocks, at least not through ETFs and mutual funds. In fact, they're buying overseas stocks. They're buying bonds. They pulled out billions from our markets. What's holding our market up?
Well, here's how they do it. The first weapon they have is monetary policy. They keep the liquidity going. The second weapon they have is artificially suppressing interest rates, keeping interest rates low so margin is high. Right now we have among the highest margin and leverage we've seen in the market since the peak of 2008. So those are the two ways. The third way is making comments, giving commentary on the valuation. So by Janet Yellen and formerly Ben Bernanke saying that we are not in an asset bubble, that is manipulating the market. That is giving investors a false assurance that the market is not overvalued. I think it's reckless. I think it's unnecessary. But I think they're going to kick it into overdrive now that we're getting closer to the election.
Although when Yellen said when she did say that something was in a bubble, the biotechs,
exactly.
Of course, they went the exact opposite way. Okay.